Welcome, everyone, to Bricks by Bricks, an inside look on how Parvis is opening access to institutional quality real estate investments. I'm Cynthia Asen, dealing representative with Parvis, and I'm excited to walk you through one of our standout opportunities, Laidler Capital Fund I. Please keep in mind this content is not intended to provide and should not be relied on for investment, tax, legal, or accounting advice. Nothing in any presentation shall be construed as a recommendation or offer to sell or a solicitation of an offer to buy any securities. So who is Parvis? Parvis is a fully registered exempt market dealer, which means every investor goes through a suitability assessment. Our platform makes it simple, secure, and transparent to invest in real estate without the need for personal guarantees or direct property management. Laidler Capital is led by Bill Laidler, a local developer with over $600 million in land transactions and $100 million in development, from rookie real estate agent to developer in just 7 years. In his first year, 2013, he sold one house. That's it. He was buying cold internet leads and getting nowhere. Instead of quitting, he hired a coach and everything changed. By his second year, Bill had helped over 49 clients buy their first homes, earning himself the Real Estate Board of Greater Vancouver's Rookie of the Year in 2014. He was 27. He was already one of the top 5 agents for RE/MAX in all of Western Canada. At 28, he crossed $100 million in transactional value and had earned over $2 million in commissions. Sitka House was his first development. It's a 6-story mid-rise residential development in the heart of Port Moody, British Columbia. He pivoted into development, developing over $100 million in new projects, and learned with boots on the ground the risks of real estate development, time, the cost of money, and government bureaucracy. He has survived and has multiple successful exits. So let's start talking about what Bill's doing today. I'm going to hand it over to Bill, and he will explain his vision, his mission. Thank you, Bill, for taking the time to present to our clients today.
Thank you, Cynthia. As you mentioned, as a real estate professional, we consistently help friends and family move further east to find the types of housing that met their needs as a growing family. As a Port Moody local, our high school friends, our coworkers, and family members will be moving to Port Coquitlam, Maple Ridge, and even Mission. When the province pre-zoned and allowed for multifamily townhomes and former single-family lots, it's created a housing revolution where there's more connection being able to be created in the existing neighborhoods where the families grew up. You've likely seen this example in Delta, where 4 generations of families have moved on to one former single-family home, where you have the great-grandparents, the grandchildren, and 2 sets of generations living in 4 separate detached homes with 4 separate titles, allowing for 4 separate mortgages and ownership on that same single-family lot. And this is what we've seen with our family. My parents live 5 minutes from our family home, and it's convenient to be able to drop by after work and on the weekends. Comparing that to my mother-in-law, who lived in Langley, and we loved her just as much, but the time that we were able to spend with her was significantly different, with that extra 30 to 45 minutes of travel, packing the kids into the cars and the car seats and heading out once or twice a month. It's this impact, the returns for the investors, and the reduced risk of pre-zoning that's led us into this housing type, while also making a real difference in young families' lives in Greater Vancouver. The provincial government in 2023 announced major changes to the way real estate approvals would occur, and most importantly, requiring cities across the province to pre-zone former single-family lots to allow for townhomes. This is creating an opportunity in the government road area of Burnaby, where the former lowest price point, or the entry level to get to new product in this established neighborhood, was $4 million for a single-family home. Laidler Capital Fund I includes a 9,000 square foot development site in this neighborhood that will provide 7 new family-oriented homes priced between $1.3 and $1.55 million. It provides access to some of the highest quality parks, Burnaby Lake, highest rated elementary schools, Seaforth Elementary, and within walking distance to 2 SkyTrain stations. Here's an example of that development. Slab-on-grade townhomes with a ground-level garage, rec room, middle-level living, and 3 full-size bedrooms on the top floor. This is across many different areas within the Burnaby market. A second site included in Laidler Capital Fund I is 6339 Dufferin, a double lot with 100 feet of frontage, providing 12 new slab-on-grade townhomes across from Kisby Park and again within 1.5 kilometers of Metrotown and SkyTrain. Finally, the most unique product type that's coming to market because of this new opportunity, 4 detached strata homes in the Caribou area of Burnaby, backing onto parkland and allowing for downsizers to access 2-story homes with an attached garage, 2,200 square feet, full-size dining room tables, pantries, walk kitchen, and 3 full bedrooms on the top floor. This is consistently been one of the most desired housing types when we were a real estate agent for the downsizers who wanted to stay in their neighborhoods, did not want to go to strata, and wanted to have at least, at maximum, 1 staircase or a rancher home. The provincial mandates required cities within Metro Vancouver urban containment boundary, ranging from West Vancouver to Langley, to allow for 4 to 6 units on former single-family properties that are larger than 3,000 square feet. There was discretion in how the province allowed the cities to roll out these policies, and 15 of the 17 cities we see as not having viable zoning bylaws, either because their density is too low, they don't allow for individual home ownership, or their development permit process creates too much uncertainty on the approval timelines. Burnaby has been identified as one of the opportunities where we can get permits within 12 months of acquisition and have the design flexibility to create these family-oriented homes that the local community is demanding. Laidler Capital Fund I reviewed over 40 applications for building partners for the 3 sites included. We went through an intense and rigorous application process, reviewing the track records, the financial covenants, and the executional business models for our partner developers. To find the sites, we underwrote over 400 opportunities in the last 12 months, contracted 8, and unfortunately had to drop 5 to secure these 3 opportunities, because as much as pre-zoning is reducing the administrative risk, there is still black holes within the city department, major red flags that were identified during feasibility, and the 3 sites selected here were the only 3 that passed all of that investment criteria. Over the past 18 months, Laidler Academy, the educational wing of Laidler, has trained over 3,000 real estate professionals at live events and webinars, and built a community around building the type of housing that we need moving forward. It's these agents and professionals that help us secure our acquisitions, create the connections within the investor networks, and ultimately will add value to the pre-sales and drive the revenue on the exit. Laidler Capital's investment thesis is to acquire sites that have a double lot, at least 72 feet of frontage, that creates large enough backyards and drive aisles and attached garages for a livable floor plan. We secure flat land only, reducing the construction cost and risk, ensuring that there's no covenants or environmental impacts that would hinder the development potential. And finally, through a subdivision process, we're able to realize significant land lifts within the acquisitions, reducing the risk to investors by lowering the cost base per unit and ensuring that we have the highest likelihood of achieving the projected returns. We ultimately are looking for the premium neighborhoods like the Upper Deer Lake area, Government Road area, where there's been a high barrier to entry for new product, and this will be the first time younger families under $2 million will be able to access those neighborhoods. Cold-to-Cut, again, is a 4 detached unit development, 2,100 square foot average unit size. To break even, the revenues only need to hit 1.65 million. The appraisals are suggesting 2.1 million, and we're underwriting within our assumptions between 1.85 and $2 million for these detached strata homes. Leland, 7 slab-on-grade townhomes, average unit size of 1,485 square feet. Again, a break-even price of less than $1.2 million. Appraisals up to $1.6 million per unit. And to achieve a 16% annual return for LP investors, need to hit 1.435 average unit price. That is well within the capability of locals to sell their condos, move away from elevators and parkades and into detached home living, ground-oriented living with front doors, backyards, and private garages. Similar to Leland, Dufferin, slab-on-grade townhomes appraised up to $1.6 million per unit, a break-even price of $1,245,000 per unit, and to achieve a 16% annual return, hitting a $1.55 million revenue number. Laidler Capital's Investors' Rights Committee works with subsidiary builders who we fund alongside our investors like yourself, side by side with equal rights, placing the capital into the subsidiary LPs as passive investors while maintaining protection for the investors through an Investors' Rights Committee. This includes Mike Saba, a principal at Bancorp Financial, and Gary Pooney, principal of the Pooney Group. Laidler Capital's Investor Rights Committee has controls in place for the passive investment in case of project delays, cost overruns, changes to the business model, and ensuring that quantity survey reports are accurate with regular site visits. We're investing alongside you, and we're investing alongside you to ensure we have the highest likelihood of success. Cynthia, thank you for the introduction. Thank you for being with us at Laidler Capital. Over to you.
Thanks, Bill. Great overview. Lots of insight, lots of thoughtfulness in terms of why you're doing this. And I really agree with the vision. I think you mentioned I have 3 kids. They're aged 26 to 35. And this is exactly the type of housing that we need. I know that people are thinking the real estate market is slow and condo sales are down. I really encourage people to look at this is what people want. This is the asset class that hasn't been built, and this is really the big demand. Laidler Capital is going to build homes in neighborhoods that people want to live at prices they can afford. So I think that's really why multiplex developments make sense. Now it's time to walk through how do you get involved with Laidler Capital and cover the highlights. Just keep in mind, I think I talked about it at the beginning, but forward-looking statements are projections about future results based on current expectations and actual outcomes and may differ materially due to risks and uncertainties. Please remember that past performance is no guarantee of future results, and it's important to review all documentation carefully to make an informed investment decision. So we talked about what the fund was investing in. These projects have a 12-month building permit timelines, reducing financial risks, carrying costs, and they bypass a lot of the political hurdles and minimize exposure to rising interest rates and construction costs. And I'd just like to add here, building when the market is slow will actually allow Laidler Capital and its builder partners the ability to negotiate better labor contracts and prices. This is a benefit to investors. So now is really the time to invest in this. The homes will come for sale in late 2026 and late 2027. So the market at that time could be completely different. Markets do cycle. Here's the key milestones. In fall of 2024, site contracting and pre-applications were made. In the summer of 2025 and fall of 2025, there will be the land closings. Some construction starts on the Cold-to-Cut will start in the fall of 2025. And then in the spring of 2026, the other 2 developments, Dufferin and Leyland, will commence construction. We really do believe the initial capital returns will start flowing out prior to the 2.5 year time frame that's been allocated for this investment. As these projects sell and units close, the money will paid back to the investors as return of capital, with a final reconciliation for profit share after all the units have sold. So why these projects? Burnaby is central to the Lower Mainland. It's 30 minutes to Vancouver, 20 minutes to Surrey. It's secured strategic locations, easy access to highways, transit, amenities, schools, and parks. And it's really the right type of real estate to meet the needs of young families, downsizers. Every unit will have a front door, attached garage, and yard area. And the market position. Families are looking and can afford houses under the 1.5 million to 1.6 million. And this is what Laidler Capital will be bringing to the market. So here's just a recap. There's 3 development sites. So you're investing in 3 premium developments totaling 23 homes, aiming for a 2 to 2.5 year exit. We're offering investors 12% preferred return per annum ahead of any profit share, and the total target return is 16% annualized, positioning your capital for strong short-term growth. Now, what Bill mentioned, talked about, we wanted to align investor interests with the partners. Everyone has contributed equity to the deal. Investors receive the first 12% before any profit split, and the forecast 16% annualized return over a 2 to 2.5 year timeline. You can see here that the general partner is investing 10%. Laidler Capital will be investing 10% of the equity required, and the builder partners will be contributing 15% of the project cost. So this is what I always call skin in the game. And I think this is really important for investors to understand. This is not a usual structure, very unique to Laidler Capital. And it does mean that everyone is well aligned and on board to deliver these profits. Laidler Capital's contribution, they will oversee all projects and earn the 40% of the profits after investors receive their 12% preferred return, while the funded general builder partners form separate project entities and contribute the 15% of each project's equity and personally guarantee all the construction loans. The developments are financially resilient, with break-even unit prices supporting investor returns even below projected sales values. Even if prices drop significantly from today's sales prices, investors achieve an 8% return per annum on their investment. Here's a QR code if you want all the specific details. You can scan this and it will take you directly to an executive summary where you can download and review all the information in much more detail. So the investment process, it's very simplified. The Parvis Investor Portal is built to simplify onboarding, tracking performance, and managing documents all in one convenient place. It's all done through an online platform with bank secure level security. It's easy for you to complete your information and easy for me to look and review your suitability. Investment allows you to access and browse offers, review deal terms, and subscribe directly. And after you've done your subscription, you'll be able to access a dashboard, which you'll be able to see your current, your past investments, including any performance updates. The documents are secure, and you will have access to all your offering documents, agreements, and tax forms. And it does track the progress. So any progress reports will be updated in the portal, easy for you to access. This is for more detailed information. It contains the executive summary, confidential information memorandum, and these are documents that we encourage everyone to review fully. After you've done this and you've decided to proceed, you need to set up your Parvis account. This is done through the online portal and takes approximately 15 minutes. Your financial snapshot is required as well as government issued photo ID. There's no requirement for supporting documents. However, I need to understand if the investment is suitable based on your financial profile. After we've done this, I will send subscription documents through DocuSign for your review and signature. Funds are due on different closing dates, which I'll go over later. A 10% deposit is required on signing. So create the Parvis account, sign subscription documents, 10% deposit on signing. First closing is June 30th. Second closing will be October 1st, and there will be an early Q1 2026 closing, which may or may not occur depending on the financial commitments from the construction loans. As Bill talked about, there is a significant land lift on the properties that were acquired in 2024. And if the banks factor these into the construction loans, it will require minimal capital investment in the third closing. So if you have any more questions, please feel free to book an appointment. Happy to go over everything in person. Thank you for your interest.